VIP level greater than VIP 1. So VIP 1 you get 20 shares, VIP 2 you get 40 shares. That's if you're having 10 USD spot asset. And this is how the shares are being calculated. But if you have VIP 0, you get into the lucky draw. So let's do a quick introduction on this project. All travel on one chain. Camino network is the first L1 built specifically for the 11 trillion travel industry, run by 100 plus established travel companies and backed by $10 million in funding. It solves critical industry pain points, high payment fees, slow settlements, and complex reconciliation. The network is already processing real business transactions with 200 plus brands building the apps and web TV travel, B2B and B2C products. So here's the founder, here's the highlight ambition. Imagine travel without payment delays, booking restriction, or fraud risks. That is what Camino Network delivers to the 11 trillion travel industry through TravelFi, ROWA tokenization, and NFT ticketing. As the first travel-specific L1 blockchain, it has 200 plus brands building on the Web3 travel infrastructure, built and governed by travel industry players, 100 plus travel facilitators, and 200 plus connected businesses. So where's the token economics? Let's go through token economics. The CAN token fuels Camino network, a blockchain tailored for the travel industry, with a total supply of 1 billion tokens. It serves as a payment and utility token, enabling payment for hotels, flights, and trips while streamlining B2B distribution. Participants can earn tokens through validation rewards, grants, and community activities. So here you have the technical overview. Optimized for travel. Every aspect of Camino network is designed to serve as the backbone for the future of the travel industry. EVM compatible interoperability with other Web3 protocols. Industry governance. Travel stakeholders make key protocol decisions. POSC hybrid consensus mechanism combining proof of stake and authority. So here's the token allocation. Marketing is getting 5%, team is getting 17%, protocol development is getting 31.2%, eco development is getting 17.5%, seed is getting 4.3%, pre-sale is getting 5%, the apps incentives like grants is getting 20%. So this is how the token is being allocated. Camino network. So let's go through the frequently asked questions to know how you can get started. So what is startup? Startup is the world's largest token launch platform where users can discover potential projects, participate in startup claim, and receive token airdrop. Startup allocates tokens to users based on a share system. Eligible users can claim a certain number of shares. The more shares you can claim, the more tokens you receive. About VIP free airdrop. How can I be eligible to participate in startup? All users participating in startup claim are required to complete KYC2 verification and hold a balance of spot assets with not less than 10 USD. How many shares can I place? So here is the VIP level and corresponding shares for each level. The higher the VIP level is, the more shares you can claim. You can claim more airdrop by upgrading your VIP level. So here's how you can upgrade your VIP level and follow this link to find out. How many tokens can I receive? Token received equals shares subscribed times token per share times distribution ratio. Tokens per share and distribution ratio vary for each project. Please refer to the announcement of project airdrop result. The more shares you subscribe, the more tokens you will receive. For example, if you subscribe for 5 shares and the tokens per share is 1,000, while the distribution ratio of startup is 0.001, you can receive 10 times 1,000 times 0.001 equals 10 tokens. So this is how the token receipt is being calculated. Do I need to pay for the startup claim? Are there any trading fees charged? No funds are required when participating in free airdrop claims. 5. If I am subscribed, am I guaranteed to receive tokens in the end? All VIP users are guaranteed to receive the airdrops, while non-VIP users' participation in startup claim will follow the partial winning mechanism and not guaranteed to receive startup airdrop tokens. Only out of lucky non-VIP users will be randomly selected for each project and even distributed airdrop allocation. Is startup participation on a first come first served basis? No, participation is not on a first come first served basis. For VIP users, the total allocation is distributed after the claim period ends based on the number of participants and their respective share ratio. For non-VIP users, the total airdrop amount varies by project, and the number of winners and airdrop amounts are not fixed. 7. Do I need to keep a sufficient balance in my account to participate in startup? For startup airdrop, sufficient balance is not required anymore before token distribution after claim. 8. How many times can I participate in startup? You can participate in the same startup only once with each KYC account, but you can participate in other startups in progress. 9. When will I get startup tokens? The final sales results will be announced before trading starts. If my VIP level is upgraded after claim, will I receive more airdrop? Users will have their VIP level verified during token distribution, and the final allocation they receive will be determined by their VIP level at the time of distribution. If the VIP level increases, the claim shares at the time of claim will be used for calculation. 11. Can I change my claim shares? VIP users participating in startup airdrops are defaulted to the maximum claim shares. The higher the VIP level, the more claim shares we can acquire, leading to more airdrop tokens. 12. How much airdrop can non-VIP users receive when participating in startup? The total airdrop amount for non-VIP users will vary depending on the project. The number of winners and the airdrop amount are not fixed. After non-VIP users participate in the claim, whether they win or not will be announced after the claim ends. You can check the result in purchase history or on the project claim page. Can non-VIP users use startup vouchers to participate in startup? Yes, they can. Non-VIP users who use startup vouchers to join the claim will have their voucher benefit prioritized. Startup vouchers guarantees a 100% corresponding share, but users still need to hold for asset of no less than $10. Can non-VIP users participate in startup airdrop multiple times? Yes, they can. Non-VIP users can participate in startup airdrop for different projects. Winners can be repeated across different projects. So here we have the GT holder exclusive airdrop. This is another kind of airdrop, still on startup. What is the GT holder exclusive airdrop claim? GT holder exclusive airdrop claim is an exclusive claim opportunity provided by startups for GT token holders, allowing them to participate in early stage project investments. What are the requirements to participate in GT holder exclusive airdrop claim? Participants must complete KYC2 verification and hold no less than 10 GT. 1. Hold 10 GT and above to qualify for 100% GT holder exclusive free airdrop. 2. Hold less than 10 GT with spot asset no less than 10 USD to participate in the lucky draw of GT holder exclusive free airdrop. with the chance to receive free airdrop tokens. 3. Can I participate in multiple GT holder exclusive airdrop subscription at the same time? Yes, you can participate in subscription for multiple projects at the same time. Is there a lockup period for the subscribed GT tokens? Generally, GT tokens contributed by the participants have no lockup period. How many shares can I claim? For GT holders with 10 GT and above, the allocation of available shares varies for different projects, and specific shares are subject to project announcements. Each user can claim up to 3,000 shares per project, provided they hold at least 10 GT. For GT holders with less than 10 GT, they can participate in a GT holding exclusive free airdrop lucky draw with no less than 10 USD spot asset. A portion of lucky users will be randomly selected for each project, and the airdrop quotas will be distributed evenly among them. The total airdrop amount depends on the project, no fixed number of winners or winning amounts. How many tokens can I receive? Tokens you receive depends on GT holdings. The more GT you hold, the more available shares you can claim, and ultimately the more tokens you get. Token received equals shares subscribed times tokens per share times distribution ratio. Token per share and distribution ratio vary for each project. Please refer to the announcement of project airdrop results. The more shares you claim, the more tokens you receive. Will my token allocation decrease if my GT holdings at the time of token distribution is lower than it was at the time of participation? Yes, your current GT holdings will be detected when token distribution happens, and if your GT holdings at the time of distribution are no less than your actual GT holdings at the time of participation, the allocation will be calculated based on your actual GT holdings at the time of participation. Otherwise, the allocation will be calculated based on your GT holdings at the time of distribution. You still need to hold no less than 10 GT to avoid potential claim failure. So what this means is that you need to have at least 10 GT to qualify and represent on the airdrop. And if you have 70 GT at the time of participation, but only have 60 GT when token distribution happens, the allocation will be calculated based on the 60 issued out during distribution. However, if there were 80 GT when token distribution happened, the allocation will be calculated based on the 70 issued initially. If I have participated, am I guaranteed to receive tokens in the end? Hold 20 and above to qualify for 100% GT holder exclusive fair drop, but you still need to hold no less than 10 GT when distribution happens. Hold less than 10 GT with spot asset not less than 10 USD to participate in the lucky draw of GT holder exclusive free airdrop, the chance to receive free airdrop tokens. Can I use startup vouchers or startup stars to participate in GT holder exclusive free airdrop? No, startup vouchers and startup stars are only applicable to general airdrop projects and cannot be used for the GT holder exclusive free airdrop. When will I know the result of my subscription? The final subscription result will be announced before trading begins. You can check the result in my sports account for subscription history. So this is the term this startup option. So here is a quick video tutorial on how you can participate on this project. So here's how you can participate.
Gate.io start expanding AI. What is Gate.io startup? Gate.io startup is one of the biggest platforms introducing early-stage projects spanning AI, DeFi, GameFi, Metaverse, and more. You can discover potential projects here, participate in startup and receive free token airdrops. Startup has successfully launched over 1,000 projects, with total participants of 14 million, a subscription amount of more than $100 million, and APY of 16.49%. How many tokens I can claim. Non-VIP users will be randomly selected to win airdrops for each project. The total airdrop amount for non-VIP users will vary depending on the project, and the number of winners and the airdrop amount are not fixed, while for VIP users, they are 100% guaranteed to receive the airdrops. The higher your VIP tier, the more shares you can claim. Are there any requirements to claim Gate.io startup free airdrops? You only need to complete KYC verification and hold no less than $10 to claim free airdrops on Gate.io startup. How to claim free airdrops on Gate.io startup. First, log into your Gate.io account, click on Profile on the homepage and complete the KYC verification. Check your wallet and hold no less than $10 spot assets. Click on Startup on the homepage to access the startup page. Click on the projects in progress and click $0 free to claim. Navigate to the project page. You can check the project introduction here. Click $0 free to claim. Tick I have read and agreed subscription agreement and click Claim Now to complete the subscription. Please note that there will be no fee deducted to claim free airdrops on Gate.io startup. You only need to hold no less than $10 to join. In addition, Startup also provides exclusive airdrop subscription opportunities for users holding GT tokens, allowing them to participate in early-stage project investments and receive project token airdrops. Participation requires only holding 10 GT token. You can go to the startup page and enter the projects labeled GT Holders Exclusive. Then you can click Hold GT and claim free. Tick I have read and agreed subscription agreement and click Claim Now to complete the subscription. You can check the airdrop results in the subscription history or on the project subscription page. By participating in startup subscriptions, you will have more access to some potential projects and stand a chance to reap substantial rewards in their early stages.
So this is how you can participate on startup. So you have to get a startup job, log into your account, go to startup page, hold at least 10 USD and click on the free to claim. And click on the free to claim for GTO the exclusive airdrop. Log into your account, go to startup page, hold at least 10 GT, hold GT and claim free. So here is how you can participate. Click for web users, click on this icon and then click on startup, and you're going to see zero free to claim. Click on that and agree to subscription agreement. So basically what you need to do is have at least 10 USDT spot asset and have a VIP level greater than 1 to guarantee 100%. But if you're at VIP level 0, you get into the lucky draw. While here you have the GT Order exclusive airdrop, how to participate. Hold GTI claim free, click on that, and then you agree to a subscription agreement. For this GT Order exclusive airdrop, you need to have at least 10 GT and above to guarantee 100% on the airdrop. If you have less than 10 GT, you can hold at least 10 USD spot to get into the lucky draw. So participation for app users, click on startup here, then click on claim free airdrop, and then you click on 0 fee to claim and agree to subscription agreement. Same thing for app users using the GTO that exclusive. So here we have added feature, claim all. What is this claim all? You can click on claim all to button to participate in all the projects you're eligible to participate in. If there is no project eligible to participate in or no, there is no project in progress, there is the no this button on the page. So how do you use the claim? Just click on start to here for web users, and you're going to see claim all here, and then you can click claim all. So this is going to allow you to automatically participate in any project which you are eligible for by just clicking this claim all. And then for app users, click on start up, and then you're going to see claim all here, and click on that. And we have this auto convert to GT. And the feature of auto convert to GT is supported on the startup homepage. When it is enabled, airdrop you receive will be automatically converted to GT based on the last price at the moment of converting. These features apply to all your current projects and your current holdings won't be affected. So this auto convert to GT is very important that you use this option because most of these tokens they are offering airdrop, they are in the early phase, so their prices are not stable. So once you get your airdrop token, you want to quickly swap that to GT, and then from GT you can now exchange it to USDT. So to use the auto convert to GT, click on startup. You're going to see more here. Click on more and click on auto convert to GT. For app users, click on startup, click on these three dots here, and then click on auto convert to GT. Note, all users with a minimum of $10 equivalent in spot assets or 10 GT and completed KYC to verification can participate in the claim. Users must meet all claim requirements to participate in the project claim. If not, they will not be able to participate in the project claim. 2. The claim rule for each initial project or startup are different, and the claim details and rules are subject to the announcement. 3. Mass registration of accounts or multiple accounts for the same users to obtain startup shares is prohibited. Most of the projects are startup blockchain projects in the early phase. Please be cautious and rational when investing and consider the risk carefully before participating. So this is how you can participate on startup. So there's the project, startup Camino network. It's offering a zero free to claim airdrop. And how you can participate is simply by holding 10 USDT spot asset, and then your VIP share is going to be used to calculate the amount of airdrop you get. So if you have VIP 1, you get 20, VIP 2, 40, VIP 3. And this is how the shares are being calculated. And they add the number of shares, they add the number of airdrop tokens. But if you have the VIP 0, you get lucky draw. So let's do a quick introduction on this project, Camino network. All travel on the one chain, all travel on one chain. Camino network is the first L1 built specifically for the 11 trillion travel industry, run by 100 plus established travel companies and backed by $10 million in funding. It solves critical industry pain points, high payment fees, slow settlement, and complex reconciliations. The network is already processing real business transactions with the network is already processing real business transactions with 200 plus brand buildings. The app and Web3 travel, B2B and B2C products. So here's the founder, here's the highlights and edition. Imagine travel without payment delay, booking restrictions, or fraud risks. That is what Camino Network delivers to the 11 trillion travel industry through TravelFi, RWA tokenization, and NFT ticketing. As the first travel-specific L1 blockchain, it has 200 plus brands building on the Web3 travel infrastructure, built and governed by travel industry players, 100 plus travel validators, 200 plus connected businesses. So token economics. The CAM token fuse Camino network, a blockchain tailored for the travel industry, with a total supply of 1 billion token, serves as a payment and utility token, enabling payment for hotels, flights, and trips, while streamlining B2B distribution. Participants can earn token through validation, reward, grants, and community activities. Technical overview. Optimized for travel, every aspect of Camino network is designed to serve as the backbone for the future of the travel industry. EVM compatible interoperability, interoperability with other Web3 protocols, industry governance, travel stakeholders make key protocol decisions, POSA hybrid consensus mechanism combining proof of stake and authority. So POSA hybrid consensus mechanism combining proof of stake and authority. So here's one technical overview. Here we have the token allocation. Marketing is getting 5%, team is getting 17%, protocol development is getting 31.2%, echo development is getting 17.5%, seed is getting 4.3%, pre-sale is getting 5%, the AR percentage slash grant is getting 20%. So these are the tokens being allocated. So let's go over frequently asked questions to quickly know more on this startup. So what is startup? Startup is the world's largest token launch platform where users can discover potential projects, participate in startup claims, and receive token airdrop. Startup allocates tokens to users based on the share system. Eligible users can claim a certain number of shares. The more shares you can claim, the more tokens you receive. So about VIP free airdrop, how can I be eligible to participate in startup? All users participating in startup claim are required to complete KYC2 verification and hold a balance of spot and set with not less than 10 USD. How many shares can I place? So your VIP level and available shares. VIP 1 you get 20, VIP 2 you get 40, VIP 300. So these are the shares that are calculated. VIP 0 you get lucky draw. The higher the VIP level is, the more shares you can claim. You can claim more airdrop by upgrading your VIP level. So you can follow this link to know more how to upgrade your VIP level. How many tokens can I receive? Token received equals shares subscribed times token per share times distribution ratio. Tokens per share and distribution ratio vary for each project. This is referred to the announcement of project airdrop results. The more shares you subscribe, the more tokens you receive. For example, if you subscribe for 5 shares and the token per share is 1,000, while the distribution ratio of startup is 0.001, you can receive 10 times 1,000 times 0.001 equals 10 tokens. So this is an example, and here's how the token receipt is being calculated. Do I need to pay for the startup claim? Are there any trading fee charged? No funds are required in participating in free airdrop claim. If I have subscribed, am I guaranteed to receive tokens in the end? All VIP users are guaranteed to receive the airdrop, while non-VIP users participating in the startup claim will follow the partial winning mechanism and are not guaranteed to receive startup airdrop tokens. Only part of lucky non-VIP users will be randomly selected for each project and evenly distributed the airdrop allocation. 6. The startup participation on the first come first served basis. No, participation is not on a first come first served basis. For VIP users, the total allocation is distributed after the claim period ends, based on the number of participants and their respective shares ratio. For non-VIP users, the total airdrop amount varies by project, and the number of winners and airdrop amounts are not fixed. Do I need to keep a sufficient balance in my account to participate in startup? For Startup airdrop sufficient balance is not required anymore before token distribution after claim. How many times can I participate in startup? You can participate in the same startup only once with each KYC account, but you can participate in other startups in progress. When will I get startup tokens? The final sale result will be announced before trading starts. If my VIP level is upgraded after claim, will I receive more airdrop? Users will have their VIP level verified during token distribution, and the final allocation they receive will be determined by their VIP level at the time of distribution. If the VIP level increases, claim shares at the time of claim may be used for calculation. Can I change my claim shares? VIP users participating in startup airdrop are defaulted to the maximum claim shares. The higher the VIP level, the more claim shares can be acquired, leading to more airdrop tokens. How much airdrop can non-VIP users receive when participating in startup? The total airdrop amount for non-VIP users will vary depending on the project. The number of winners and the airdrop amounts are not fixed. After non-VIP users participate in the claim, whether they win or not will be announced after the claim ends. You can check the result in the purchase history or on the project claim page. Can non-VIP users start over share to participate in startup? Yes, they can. Non-VIP users who use startup vouchers to join the claim will have their voucher benefit prioritized. Startup vouchers guarantees a 100% corresponding share, but users still need to hold spot asset of no less than $10. Can non-VIP users participate in startup airdrop multiple times? Yes, they can. Non-VIP users can participate in startup airdrop for different projects. Winners can be repeated across different projects. So that's it. So let's go through the few other startup projects that are currently ongoing. So here we have other projects that are currently ongoing. We have other projects that you can participate in. Um, so here we have the startup Carnival. So here is startup Carnival. So here are other currently ongoing projects. Here we have how to participate. How you can participate. Mm. Here we have the startup Carnival, where you can participate on startup projects. So you can participate on startup projects using the startup Carnival. Here are other ongoing projects. So we have this zero fee to claim, You have this hold GT and claim free project also. And here you can participate in get notified for free airdrop. So you can also set a notification. So here you click on more, and here's the auto convert to GT option. Hello, welcome to the stream. Topic is technical analysis and tokenomics. So before we go into technical analysis, what does the term tokenomics mean? The term tokenomics this refers to the study of the native application of a token in society. That's how a token is being used in society. As soon as the usage of a token in society could range from network fees, payments, making payments online, and gaming online. These are just some usage. You can make your research on that usage. So this is the token analysis on I said I'm on the network. Let's do an overview of this token before going to analyzing the chart. So here's the current price, 0.04199. Here you have the project report. It tells you the usage and the tokenomics of this token. So some of the usage and the tokenomics of the token are: one, it is used in gaming web theory. Two, it's used for making payments online and in shop using the Atlas Visa MasterCard. So these are just some usage. You can go to the project report to find out more about other usage. Here's the Explorer. This is where transactions are recorded on the network. So if you make any transaction, you want to confirm the transaction, go to the Explorer to do that. Here's the price chart. And you have the market cap. This tells you the amount of the token as in circulation. And here you have the data. This is the percentage inflow of the token in the exchange. And here's the percentage outflow. You can see the percentage inflow is greater than the percentage outflow. So what does this mean? It means that token is stable and tradable on the exchange. So let's go to the frequently asked questions to know more on this token. What determines the price movement? There are two schools of thought when it comes to determining the price by way of intrinsic value. Intrinsic value is typically assessed through on-chain metrics, project metrics, and financial metrics of the network, collectively known as fundamental analysis. Factors such as law of supply and demand, tokenomics, use case, project roadmap, and the regulatory and governance environment influence the long-term value of the network. By way of price action, technical analysis using candlestick chart patterns and indicators like MACD, RSI, and Bollinger Bands forecast the price of the network on the basis that history tends to repeat itself. Since candlestick charts reflect market sentiment, news announcements, and community sentiment, and also significantly influence the price option of the network. Long-term investors usually favor fundamental analysis, while short-term traders often depend on technical analysis. In practice, combining both approaches can yield in trading scenarios for the network and the broader market. What is the highest price of this network in history? This network achieved the all-time high of 0.082178 and is currently trading at 0.04204. So what is the lowest price of this network in history? The all-time low of this token is 0.04141. And here is the current price which the token is at. Observing the current price which the token is at. You can deduce that its current price is close to the all-time low. So what does this mean? This means that the price is a very good entry point and a good demand zone for this token. So it also means that the price has a high probability of going upwards than downwards because the price is very close to the all-time low. What is the current market cap of the network? The current market cap of the network is 64.82 million as 1.54 as them trading at the price of 0.04204. How many networks are there in the market? There are currently 1.54 billion licenses circulating in the market. These network can be actively traded or used in the open market. What is the maximum supply of this network? Maximum supply is 100 billion, which includes its circulating supply, log-to-stick supply, and supplies yet to be mined, minted, or created. So the maximum supply on this token is 100 billion, and the current supply is 1.54 billion. So what does this mean? This means there is still a lot of room for investment on this token. What is the fully diluted market cap or FDV of the network? At the moment, the fully diluted market cap, also called the fully diluted value FDV of the network, is 4.20 billion. The FDV is calculated taking the assumption that all supply of the network is circulation multiplied by its current price. Here's the current price. What is the price prediction of the network? Using an algorithm to automatically identify historical data trends, this network price prediction adjusts its forecast from time to time based on current market conditions with advanced machine learning. This prediction tool can help investors gauge market capabilities before making investment decisions. So is the network a good investment? The network offers a good potential ROI due to its inherent volatility, which presents numerous profit opportunities. However, this volatility is a double-edged sword, making it suitable for investors with high risk tolerance and a strong financial position. It's crucial to remember that the network and the broader markets are subject to extreme market conditions, regulatory changes, social media influence, and other unpredictable factors. Therefore, it's advisable to exercise risk management and do your own research before investing. So, how to buy? This is how you can make a purchase. So, this is on the overview. Let's get back to the chart. So, before we go into analyzing the chart, it's very important that you observe the price at which your token is at because the price of a token determines the liquidity rate of that token. And what do we mean by liquidity rate? Simply means the effect of loss or dip in the market on that token. So if there's loss in the market or there's dip in the market or the market is on a bearish downtrend, how is it going to affect this token? It's determined by the price of the token. So if the price of the token is low, the loss in the market is going to be light on the token. And if the price of the token is high, the loss in the market is going to be heavy on the token. So let us check the liquidity rate of this token using this point here, this bearish candlestick here. So this is a bearish candlestick and this is a bullish candlestick. So we're checking on the bearish candlestick. So we're going to use the top of the candle, 0.05743. For 1,000, and then we come to the bottom of the candle and use this bottom price 0.05621. 0.05621. So you can see the price has changed from 1,000 to 978. So that means there was 22 USDT lost in the market. From this point to this point, you lost 22 USDT. So that is the liquidity rate from this point to this point. And you can see that it is low compared to a high liquidity rate token. So this is an example of a high liquidity rate token, the BTC market. And why is the liquidity rate high? Because the price of the token is high. So I want to check the liquidity rate of this token. We are going to use 2 points like we did earlier. So we use this point here and this point here. So I'm going to put this top price here 101.83 to confirm the price again 101.83. So we're going to put in 1,000 is the seller price. Then we'll come to the bottom of this candle here 96449. So I'm going to use this new price now. So using this bottom price on 96449, you can see the USDT value is now 0. So what does this mean? This means complete liquidation. And what does complete liquidation means? It means you lost your whole trading capital. So from this point here to this point here, you're completely liquidated in the market. So to avoid complete liquidation easily in the market, it's better that you trade low liquidity rate tokens than high liquidity rate tokens. Because in the case of low liquidity rate tokens, if you should make a loss, you can always trade and accumulate profits to cover for the losses. But in the case of a high liquidity rate token, you can be easily completely liquidated in the sense that you can lose your whole trading capital easily in such market. So to avoid the risk, it's better you trade low liquidity rate tokens with good tokenomics. So after going through the price, the next thing you should observe is the order book. It's important to observe the order book because if you are buying or selling, it's from this order book that your orders are going to be placed. So over here, this is the sell order book, and over here, this is the buy order book. So if you are selling, you're using this buy option to sell here, and if you are selling, you are selling to this buyer's option. So it is from these options here that your trade are going to be placed. So you want to observe the prices and make sure that the prices are fair to which you are placing your order at. So going through the prices on this order book now, you can see that the prices are quite similar in terms of range. There's no much difference in the prices. So that means this market is still untradeable. Likewise, the buy order. Going through the buy order book, you can see the market is also stable and tradable. And if you observe this first buying price on the order book and then observe this first selling price, you see that the buying price is lower than the selling price. So what does that mean? That means profit. Because profit in any venture is when you are buying at a low price and selling at a high price. And you can see that here. So this is a very profitable market. Going over the spotting option, we have the limit market and stop limit option. I'm going to show you how you can best use each of these options and what's the best way to use each of these options. When it comes to this first option, the limit option, how do you use this option? This option is used for making immediate transactions or placing immediate order on the market. So if you're looking to buy or sell immediately at the current price of the market or higher, this is the option to use. So using the buy limit option, you simply put in the amount of token you want to purchase, and then the market is going to place another at the current price or higher. If you are using the sell option also, what you do is you put in the amount you want to sell, and the order is going to be placed for you at the current sell price or a better price. So that's it on using this limit option. Next, we have the market option. The market option is used to place order at the best price. Place order at the best price. This is the market option over here. To place order at the best price. How do you use this option and how does this option works? This option places an order for you at whatever price is available on the market. And I don't really advise that you use this option. Why is that? Because as a trader, you're looking to buy at a very low price and sell at a high price. And this market option does not really give you that leverage of doing that. So I don't really advise the market option when it comes to placing trade. because you don't get the leverage of sort of deciding the price at which you want to buy it. And this is very important. Your entry point is very important in the market. So the price at which you are buying at is very important. And also, there's a way traders make a lot of loss using this market option. And I'm going to point that to you so you can avoid this also. So, for instance, on some scenarios, there are some other books that are manipulated. And what do I mean by other book being manipulated? For example, if the tokens are selling at 100 USD price, the first price on the other book might be 100, second price 50, third price 10. So you can observe there's a huge gap in the price difference I just mentioned. So if you are using the market option to trade such markets, if two people are placing an order for 100 USD each of that token, the first person is going to get the first price of 100, and the second person is going to get the second price of 50. So the second person is automatically going to make a loss because it's getting the sale price of 50 without him knowing because he did not go through the other book. So it is important that you go through the other book when placing this market option to avoid placing an order at the price that's not favorable to you so you don't incur losses without your knowledge. Then we have the stop limit option. This stop limit option is best when it comes to making precise entry points into the market. So if you are looking to enter the market at a particular price, this is the option to use, the stop limit option. So what do? You simply put in the stock price which you want to buy at. And in most cases, you want to put your stock price lower than the current market price or lower than the current market price. So you want to put your stock price lower than the current market price. So you can see the stock price now is lower than this limit price. So what does this mean? It means when the market goes down to this stock price here, that's when your buy order is going to be placed. Also, if you are selling using the stop limit option, it's also very beneficial. Why is that? Because you can decide to sell at the stop price higher than the limit price. Or if you bought at a particular price, you can use your buy price as your limit price and put a stop price above your buy price. That way you'll be guaranteeing profit in the trade. So if, for example, this is how you want to place a sell order to take profit. So this is an example of how you want to place a stop order to take profit by putting a stop loss above the limit price. So what happens is that when the market gets to this high price, that's when your order is going to be placed, and so you're going to take profit. Also, you can also use your buy price as your limit price and put a stop price above that limit price or above that buy price. Sell at a higher price than what you bought at, so you're making profit on the trade. So this is the stop limit option. And also using the stop limit option is what we call the stop loss. What is the stop loss? Stop loss is very important when trading. It is a it is simply put, stop loss is to cut your loss short in the market. So for instance, if you enter a trade and you are scared that the market might be liquidated or you're not sure of that trade, you can put a stop loss to sell if the market is going down or if the market is being liquidated downwards. And how do you do that? You simply put a stop price below the limit price. So if the market is going below the limit price, you can sell and then cut your loss short. So you want to place your stop loss price very close to this limit price so you don't incur a lot of losses before you sell. So this is how you can put a stop loss using the stop limit option. And also, this stop limit option is also very beneficial because it allows you to place two orders simultaneously. So you can place two sell orders simultaneously. And how do you do that? You simply place a sell order above the limit price to take profit, and then you can place another sell order below the limit price to put a stop loss on the trade. So if the market goes high, you take a profit. If the market is going low, a stop loss is going to be triggered. So that's why you can use this option to do that. So let's do some analysis on this chart. So before we go into analyzing this chart, there are some terms that I want to share with you because traders use this term in making decisions in the market. So the first term is known as hold. What is hold? Hold simply means to hold on to a token when the market is bearish or when the market is undergoing a dip. So when should you hold and when should you sell? It's important to know this. And the second term is known as food, fear, uncertainty, and doubt. So sometimes there's fear, uncertainty, and doubt in the market. What should you do at such point? And thirdly, we have what we call FOMO, fear of missing out. What is FOMO? FOMO, simply put, is when traders stay longer in a trade or enter a trade because they are scared of missing out on potential profit on that trade. So they stay longer in the trade, even when there's liquidity and they are incurring loss on their capital, they stay in the trade because they are scared of missing out on profit from that trade. That also called FOMO. So you need to curb your FOMO when it comes to trading. And the way to elaborate this FOMO for you is in the case of when a token is new an exchange, and then you see influencers influencing the token, they tell you that this token is going to make 2x or 100x in 2 years' time. And what happens is that you see traders holding on to this token because of the profit they were promised, and they ignore one of the important aspects, which is the tokenomics of the asset. So this form must simply put it, if you are not holding on to such token just because of influence and you're not checking the tokenomics on this token, it can lead to FOMO, fear of missing out. Because when a token does not have good tokenomics, only influence on that token, it means the token does not have, despite the loss that has been accrued on your capital, just because you are scared of missing out on that 2 years profit which you were promised. So you tend to hold on to this token. And in some cases, this can lead to complete liquidation and you losing your whole capital. So you want to avoid this FOMO. So let us break down this chart. So here we have liquidity. This liquidity, and then we have buy here. So it's important that before you buy into a token, you want to look for liquidity. And why are you looking for liquidity? Because liquidity lowers the price of the token. So when the price of the token has been lowered, a demand zone has been created in that token. So you can now start buying. So we don't check for liquidity before you buy. And what follows the liquidity is what we call a fair value gap, for short FVG. So what is an FVG? Simply put, an FVG is the gap between the liquidity points in the market where traders take profit from. And it's important to note that not all fair value gap positions are profitable. We have three kinds of fair value gap. We have the weak fair value gap, we have the moderate fair value gap, and we have the long fair value gap. The weak fair value gap is little or no profit. The moderate fair value gap is moderate profit. And the long fair value gap, there is long and maximum profit in that position. So you are aiming for the maximum profit on the long fair value gap. So let's break this chart down. So you can see we're buying at this point here. And you can see there's fair value gap here. This is a weak fair value gap because there's little on the profit here. And here you have liquidity again. And simply put, what is liquidity? Liquidity, we know liquidity lowers the price of the token, but in a broader aspect, liquidity is actually the zones where traders take profit and traders put their stop loss. So to go into details, we have two kinds of liquidity in the market because the whole chart is based on liquidity. So we have the sell side liquidity and we have the buy side liquidity. What is the sell side liquidity and what is the buy side liquidity? So the point where a series of sell orders are pushing the market down is called the sell side liquidity. And the point where a series of buy order is pushing the market up is called the buy side liquidity. So the buy side liquidity is where the profit actually lies in the market. And so that is where you want to take profit. While the sell side liquidity is where you want to put your stop loss. So let's go to charts and continue. So this is liquidity here, lowering the price. So both at this point here, and then you can see another fair value gap being built here, and then you see liquidity here, and then you see another fair value gap here. This is the weak fair value gap that is leading to profit here, and then you see liquidity again, and then you see fair value gap. This is also a weak fair value gap that is leading to earning profit, and then you see liquidity. So when does liquidity keep happening in the market? Or what does sell-side liquidity keep happening in the market? Because liquidity is filling the gap that was created by the fair value gap. So the fair value gap creates an imbalance in the market. So liquidity fills that gap and balances the market to the last liquidity point. So in this process, the profit that was made from the last fair value gap is taken from the market, and also the price of the token is now lowered to the last liquidity point or below. So this is what liquidity does in the market. And after that, you have a fair value gap again building up. So this is what we call a moderate fair value gap here. So at this point here is where you want to sell and take your profit. It's important that you sell at this point here or during this phase here. So this phase here where the price of this goes going up and down and the market is not defined. They call this phase an accumulation or consolidation phase. So this is what we call accumulation or consolidation phase here, this point here. So it's best to sell at this point, either at the top of this fair value gap point or during this accumulation phase. Avoid selling when the market has been liquidated, because you know when the market has been liquidated, profit has been taken away from the fair value gap position and the price has been lowered. So when the market is actually liquidating, you want to start checking for buys, not sales. So you want to sell when the market is high. So you sell at this point here, and how do you do that to take your profit? You use the limit option. So you sell using the limit option to take your profit. So that is it and on this upswing or this uptrend here. So looking at this bearish part of the market now, this is where I want to get some insight, because sometimes when the market is bearish, traders they make a lot of irrational and emotional decisions because they are making a loss. And sometimes these decisions can lead to regret. So it's best that you have a system that works for you if you find yourself in this bearish part of the market, so you can navigate through this part with minimum risk or minimum losses. So it's important to note that when the market is bullish, or when the market is in an uptrend, there's only one decision you have to make, and that decision is to take your profit. But on the contrary, when the market is bearish, there are so many decisions that you have to make. And so traders sometimes make some irrational and emotional decisions because they're making a loss. So how do you go about this bearish part of the market to avoid much losses? Let's go into that. So here we have this bearish candle here. And if you observe the bottom of this candle here, it sits just above the buy point here. The bottom of this candle is just above your buy point. So what does that mean when the bottom of the candle is above your buy point? It means you have this zone of profit left. And what do you want to do when you have this zone of profit left? You want to sell immediately at this spot here, and you sell using the limit option to take your profit. While looking at this second bearish candle here, you can see the bottom of this candle is down below your buy point. We are looking observing the second bearish candle. The bottom of this candle is now below your buy point. So what does that mean when the market is below your buy point? It means that loss is being accrued on your capital. So you are incurring loss on your capital. So what do you do at this point? You want to cut the loss short to the minimum. And how do you do that? You simply sell using the limit option. You sell using the limit option. And if you're able to do that, you are going to avoid this further liquidity on the market. It's important to sell immediately. Don't wait for when the market has been liquidated down to this point here before you now decide to sell. No, that's going to be wrong because that will mean you are making an irrational decision. When you should have just hold on for the market to come back up, then you can now decide to sell. So it's best that to avoid this, you sell immediately. The market is going below your buy point. Cut your loss short in the market. And you see, if you cut your loss short, you are going to avoid further liquidity, and also you're also going to avoid this third dip here. So it's important that you cut your loss short here. And before we conclude on this chart here, there's an opportunity here I want to point out to you. So where is this opportunity? The opportunity lies in this wick of this candle. This is where the opportunity lies. And how can you get into this opportunity? You know that liquidity in the market is a good indicator for buys. And so when you have this kind of liquidity, this is a very good position to buy into the market. Why is that? Because the liquidity is very this is very high liquidity. So if you are buying, here's the profit range you're looking at. So if you're able to get into this trade at this liquidity point now, by here, here's the profit range you're looking at. It's a very profitable trade. But how can you place this trade? Let's go about that. You can only enter this market using the stop limit by order. And why is that? Because if you observe this week of this candle is very thin. It means that price just went down and up immediately. This is the very fast price movement. And so if you're able to make a time entry using the stop limit buy option to buy into this point here, that's a very profitable trade to the next favorable position. And it's also important to note that the wick of the candle being long is a probability. Sometimes the wick of the candle is short, and sometimes the wick of the candle is long. If the wick of the candle is long and you're able to make a time entry using the stop limit option, it's a very profitable trade. So let's analyze this chart here. So I said earlier we have three kinds of fair value gap, and you can see that explicitly. We have the weak fair value gap, we have the moderate fair value gap, or we have the long fair value gap. So I said the weak fair value gap is where you have little or no profit, which is this fair value gap here. And what is fair value gap simply put? Fair value gap is the gap between liquidity points in the market where traders take profit. And so we have three kinds of fair value gap. But it's also important to note that not all fair value gap are profitable, like this here now. So this fair value gap is a weak fair value gap because there's little or no profit. And this fair value gap is a moderate fair value gap because you have moderate profit here. And here is the long fair value gap where we have maximum profit. And this is where you are aiming to take maximum profit from. So let's break down this chart. So you can observe there's liquidity here. And liquidity is a good indicator to buy into the market. Why is that? Because liquidity lowers the price of the market, and you want to buy when the price is low. So you can sell when the price is high and take profit. So observing this liquidity here, You see there's another fair value gap here, and now there's liquidity here. At this second liquidity spot here, this is where we have the buy option. This is what we brought into the market. So I just want to point out this. We know that liquidity basically is a good indicator to buy, but sometimes you can also be patient and wait for a better opportunity to present itself, like we did here. So you can see we could have bought at this point here, or waited for a better opportunity, because this is now actually a better point than this point. Although there's nothing wrong if you bought at this point, but I'm just stating that this is now a better position to buy. And if you're buying at this point now, you see there's fair value gap here up to this point. This is a moderate fair value gap. So you can sell at this point to take profit. And how do you do that? You sell using the limit option. And then you can see there's another fair value gap here. Causing liquidity is now liquidity position here. After fair value gap, I will call liquidity. And what does liquidity occur in the market? Liquidity simply lowers the price of the market. But what does it do also? Liquidity also takes out the profit from the fair value gap position. So in the process of the market price being lower, the profit that was gotten from the last fair value gap position is also going to be taken out of the market. So you want to make sure that you sell before that happens. And at this point, you can buy again and then start taking profit on this long fair value gap position. So this is a very long profit position because there's maximum profit here. This is a long fair value gap position where you want to take maximum profit. And how do you take your profit? You sell using the limit option. So you want to sell at this point here. Avoid selling when the market has been liquidated. Because like we said earlier, when the market has been liquidated, the profit has been taken away from the fair value gap position and the price has now been lowered. So when the price has been lowered, that's actually an indicator for you to now buy, not looking for sales. So you want to sell at this point here to take your profit or immediately liquidity starts. Avoid selling when market has been completely liquidated because that will mean that all the profit has been taken away from the market. So at this point here now, when the market has been liquidated, you can now buy again and then start taking profits up to this position here. And this point here now, you can now sell again and take your profit using the same limit option. And if you observe these two profit positions, you see that they are quite similar. So these are both long fair value gap positions here, where you want to take maximum profits from. And there's a trend here I want you to pay attention to. There's a trend here. The trend is whenever you have the market going up, going down, and then going up. So you can see the market is swinging high at two equal points. Whenever you have the market swinging high, swing low, and swing high, the market is swinging at two equal points. Whenever you have this is an indicator. And what does this indicate? It indicates a breaking structure downwards. And when the market is breaking structure downwards, what's happening? Liquidity is being created in the market. And when there's liquidity, what does that do? That lowers the price of the market, and now you want to start buying because a good demand zone has been created for you to start buying. And then you can now start taking profit on the next fair value gap position. So that's it on this trend here. Similar to this trend, we have a similar trend. I'll just point this out to you. It's also an indicator trend. So here is it. Whenever you have the market swinging low at two equal points, you can see the market swings low, swings high, and then swings low. Whenever you have the market swinging low at two equal points, this is also an indicator. And what does this indicate? This indicates a breaking structure upwards. So the first case was a breaking structure upwards, two upward swing, and then a breaking structure downwards. That was the first case. And that's the inverse of this case. In this case, you're having two downward swings. So the price is swinging down at two equal prices, and then there's a breaking structure upwards. And when the market is breaking structure upwards, what's happening? Profit is being accumulated. And how do you take your profit? You sell using the limit option to take your profit. So that's it in our position. So over here we have what we call the Fibonacci retracement tool. You can find the Fibonacci retracement tool here. Here you can find the Fibonacci retracement tool. So how do you use the Fibonacci retracement tool? And what is this tool used for? So this tool is used for making high probability prediction on when and where the market is going to break structure. So let's begin. How do you use this tool? Before using this tool, it's important to note that this 0.618 and zero point 0.5 zone, these two zones are magnet for price reaction. So price like to make a reaction within this point here. And what do I mean by price reaction? I mean support and resistance. So support and resistance are occurring at these two zones here. So you can see this point here now. This will call is support point. Why is there a support point? Because this point the market is being kept high. This point here is a resistance. Why is there resistance? Because the market is being kept low. This point here is a resistance. Why is there resistance? Because the market is being kept low. So here we have support, resistance, resistance. And if you observe, all these three positions are occurring between the 0.618 and zero point 0.5 zone. So this is what is peculiar with this Fibonacci retracement tool. So how do you now use this tool now to know when and where the market is going to break structure? You simply wait for the market to make a retracement to that zone again. And once the market makes a retracement to that zone, you now confirm the Fibonacci retracement tool. So after confirming the retracement, what is now the next step? You want to know which way is the market going to break structure, because you know now that the market is going to break structure with this confirmation. But in which way is the market going to break structure? Is it going to break structure upwards or is it going to break structure downwards? We don't know that. So how do we know that? We combine the fair value gap with this. So how do you combine the fair value gap? You simply observe the block as the form. So this is a bullish candle here. So what do we know? We know that the fair value gap is still being built. So we are patient, wait for the next confirmation candle. And then we see the spot this liquidity confirmation candle, which signifies the market is going downwards. Because what does liquidity do to the market? Liquidity lowers the price of the market and takes out the profit that was made from the last fair value gap position. So you know that the market is going to break structure downwards now. So how do you now benefit with this knowledge in your trading? Here's how you can benefit. You simply observe the lowest price on the chart. So you make the tracement on the chart to the low price on the chart. So this is the lowest point on the chart here. And then you want to place a buy order. So you are going to use a buy stop limit order. So on the so let's get back to the Fibonacci retracement tool. So how you can use this tool in your trading. So you want to place a buy stop limit order at the wick of this candle here. So at the wick of this candle here, you are going to place the buy order. And you can see that order was triggered at this point here. And so you want to also put a stop loss at the bottom of this chart here. So you're going to place your stop loss here and place your stop limit buy order here. So at this point here, the market triggered the trading, and then you can now start taking profit on the next fair value gap. So this is how you can use the Fibonacci retracement to make high probability prediction on when and where the market is going to break structure to. So I want to introduce this to you as a trend line. How do you use trend line? What are trend